Good afternoon. This Tuesday, February 10th. Well, the WASDE crop report was out today. I'm not going to show the graphics today. It was pretty much uneventful for the exception of the corn, the old crop corn. They did lower the carryout by 100 million bushels, the direct result of increasing the exports by 100 million bushels to 3 billion, and rightfully so. It's been a banner year, yet the corn market has not responded to this because, well, frankly, the carryout's still over 2.1 billion bushels. Nobody's going to get excited. And I know I had one client tell me today, you're the only guy I know that's friendly corn market that thinks it can actually rally. Well, that's good. I like being there because when everybody's thinking the same thing, then nobody's thinking. So consider the fact our USDA cannot have the ability to have boots on the ground as much as they can have in the United States. They can't do it in China. Well, a communistic country which has a propaganda department told us, and the USDA accepts it, that they grew a 301 million metric ton corn crop. Now, of course, if you need to buy grain and you have a shortfall, you're not going to tell the truth. Well, satellite imagery tells us they had a hot, dry summer last year into pollination. Then the rains came and they wouldn't stop, and they had a horrible torrential rains during their harvest. And they don't get to store grain like we do in the United States. They have concrete bunkers. They don't get to have covered grain all winter for all of the crop. And so a lot of this crop, and the USDA picked up on it 2 Thursdays ago in their report where they said their attachés, plural, feel that as much as 10% of that corn crop is ruined from vomitoxin and mold, not even blendable, the bulk of it. So that means China's going to be looking to buy some corn here soon on the world market. Maybe it's not from us, but it likely could be from us. But whether world market or not, that world corn carryout number that they lowered slightly this month, it can come down a lot more because this will be off balance books new corn buying from China. And if they started to buy 300 to 400 million bushels of corn, especially a lot of from us, that carryout all of a sudden falls below 2 billion bushels. And when could this occur? Because timing is everything, right? Probably closer towards the second quarter in March and April. That's when China has bought a lot of corn from us in the past. March is more the month. So keep this in mind as we start looking at our charts and how corn could possibly rally when everybody has convinced themselves they are bearish now. Kind of like beans, right? Well, here we are with the March corn contract. Wave one was possibly 2 weeks ago, and then we had that dip on the opening of the month. We think that's wave two, and now this could be starting a wave 1, 2, 3, which could have been the crop report, but it wasn't. Probably got to be China. 4, 5 to get us a 3 up in this, back to that 450 price range. Now, we could likely have to readjust this, with next week, we're going to start focusing on the end of the month. And I should have put that 2 more over here. You're going to have all these hedge to arrives that are come due. And if corn is not lifting, they're going to start selling. And that could cause us probably to drift back down to that low 420 range. But from there, you could start a 1, 2, 3, 4, 5, wave 3 up in this 450 range. If not, something more stronger like this here. And this will start to come into play on the May contract. We'll be focusing on the upper 460 range, which is what our continuation chart was always letting on to. Now, new crop corn, we're at 458, I think is the average for the month right now. 470 was last year's complete month of February. And we have moving average resistance stalling us for right now. But if we can breach above that, and more importantly, this downtrend line, which comes back in just above last week's high, that's going to take a little work. And it's going to take some announcement that China's snooping around for corn. They're on holiday through the 17th. So this might be after we get done averaging out the month of February, which probably will be lucky if we can get a 459, 460 average if we maintain some strength in here, but stay under the trend line. So it's probably in March that we breach this thing as we get ready for the March 31st acreage report. A lot of Elliott Wave guys out there and chart guys don't understand how the markets evolve. I, have an idea of it. And so when you can see that March is when the acreage starts getting set, we better kick it in gear if corn wants to maintain its acreage, because soybeans are starting to look pretty friendly and healthy. So speaking of soybeans, interesting, last week, everybody on RFD TV, by the way, join me Thursdays between 12:12 and 12:25. I'm on RFD TV. But I couldn't help but notice everybody sells, palms out, sell. Can never go up anymore. And then, of course, Friday it did this and pulled back. But note, even today, they could have drove down a previous day's low and they couldn't do it. And today we get the highest close on beans since making the low the first trading day of the year. Imagine that. It's going up. Soybean daily continuation chart. We'll be switching over to May probably next week. And I want you to notice I have this labeled wave 3, looking for a 4, but I thought maybe we were going to start a 4 from this and pull back into a 4, but this thing is still rolling. And maybe we're not even done with 3, and we're still climbing here yet before we even get a wave 4, because I am looking for $12 beans on this thing, because all we got to do is take the length of this leg, which, to remind you, was $1.70 roughly. Well, you add $1.70 to this, and you get $12 and a couple coins. So I'm still expecting something big up here to clean out the rest of the bins on old crop sales. Yeah, we could have done it all here. We could have done that, but I'm not God. Neither is anybody else. Make the best we can on trying to watch these waves. And I think with China likely going to surprise everybody again, they're going to take 8 million metric tons of beans. Now, the USDA put a little note in their work today that said, well, if China does come, they'll probably push other customers out from us. Or will they? Because Brazil's having a hell of a time getting their beans out of their docks. They're having a hard of a time dredging one of them. We are reliable. And even though our Mississippi is not as high as we'd like it to be, we just charge more and put less on per barge and just keep her moving and work long shifts. And so we'll get that grain out of here if you want it. And so this movement to $12 to me does not look comical. I'm not even trying for extensions, which wave 3 can be, and I will not rule out. But the intraday chart, I talked about how maybe a 4 did or didn't occur. Well, you could say from the lows, here's your low, your 1, 2, and you get a 1, 2, 3, 4 maybe did occur, and now we're in the final 5. But this 5 will really be kicking it if we are still in the 5. So we'll see. I'm looking for $12 beans. That's your takeaway from this. On new crop beans, I'd put this in the weekend hedger. Note the equal movement here that went to the high in November. By a few pennies, we missed match movement. If I do that same thing again here, well, we get 11.52, 53. Well, maybe we go to 11.45. I'll take that. We will start some new crop sales, probably on an attempt at the 11.30 range again, and probably like to get at least half sold up here. Our new crop sales, I don't like to go beyond half because you never know how the crop's going to turn out. And so they always have to have something for after harvest as well. Anybody who sells it all before it's in the ground, well, good luck to him when we're in the bare years. He's a genius. But he looks kind of dumb when you're selling 100% of the crop at cost of farming or below the cost of farming. That's not how you make money, so to speak. You got to have some element of open surprise. And if anything, you use puts on the rest of the crop when you get to profitable levels. But as far as fixed sales, I don't like going beyond 50% before it's in the ground, or at least I say out of the ground. If you're getting value from this video and want more, just check out our daily newsletter. Each morning, we send a market summary to start your day, plus deep dive analysis, trade alerts, breaking news, and videos just like this. Whether you're a farmer, trader, or just tracking the markets, it's a great way to stay ahead. Start a free trial by scanning the QR code on screen or clicking the link in the description. Call us at 701-222-0221 or visit heartlandinvest.com. Now wheat, the lowly garbage wheat, as much as they hate it, we had a slightly negative result from the report today. And what did Kansas City wheat do? After retreating 2 days, expecting probably something from the USDA, we closed higher on the day. Not only that, we didn't even take out yesterday's low in the bearish report and closed higher, and almost ran the risk of putting in an outside day, closing above the previous day's high. Well, that would have been a key reversal. But nonetheless, here we are. It is 200-day moving average. We used to never be able to close above it. Now we can close above it, and now we can't stay below it. Well, that should mean something's coming here to lift us up towards our next 60-day cycle turn into early March. We'll see. The fighting continues in Ukraine and Russia, and they claim it's getting harder and harder to export grain out of Ukraine because Russia is raising havoc on the ability to move the grain. Electricity's always out, and they're hitting a few spots that is not helping exports. So whatever it is, my bias is to the upside. Look at Chicago wheat. We're above on the continuation chart. We're above the 200-day moving average as well. The slope is still negative. Nice to get that positive. But here too, today made a lower low, unlike Kansas City wheat, and closed higher on the session. So maybe we're on to something into tomorrow. And by the way, turnaround Tuesday closed higher and on the wheat, on the beans, and for the most part, did it on corn as well by a tick. Now let's get to cattle. We have to talk, as Joan Rivers would say. Can we talk? We have a cash trade out there last week that went to 245. And everybody's saying, oh, we're going to, no, I wouldn't use the word everybody. There's a lot of boys out there saying, we're going to 250 cash trade. And you know what? We maybe will in the month of February or early March because the tightest numbers are in the first quarter. Now, on the charts, this is an April contract. We may be coming off already by then, and maybe we do go to a 250 cash, but the board high was last week at 244, and I talked about 244 numerous times. You can go find the old videos and newsletters, and I'd said, 240 is a problem. If you close above it, you go to 244. And I've been saying a left shoulder, head, right shoulders in an extremely bull market. The right shoulder, as you know, is higher than the left shoulder. And if you're in an screaming bull market like we are, it should be. And what happened? We bombed away last week. And here's something else. If this is a head and shoulders top, you got to break a neckline. Well, if you zoom this thing way out to the bottom of August of 2024, this whole thing got going, peaking last October. I know many don't want to accept that fact that it did. The reality is your neckline is drawn from here. And you can just kind of see that. And how ironic, 232 is part of the breakout. 232, we had said once it got above it, it's now support. It was support here. Here's a trend line. Here's a moving average. You close below 232, this is the top. This is the left shoulder. This will be the right shoulder by a new high, and down you go. Now, before you laugh, look at a weekly continuation chart. Tell me this doesn't look hairy. Left shoulder, a wave 5 high. Your head, your right shoulder. Look at this weekly bar. What a blowout. Barely closed higher last week. That's last week's bar for the week. So you can see you close lower this week, which we're not far away from being lower on the week here in a few more pennies. This starts setting up the aha moment that maybe we get down to 32 and hold, and then we bounce, and then we break again. The point is, get your LRPs in place. Get your options in place. This market is not acting well. The index funds might be exiting while it still looks good, getting rid of their ownership because they haven't made money in cattle since October, and they're just glad to get their money back. Let's go to feeder cattle. Remember this blue line I always talk about? 15-day moving average. Instead of jamming it and popping, jamming it, we just came down and touched it. Reach out and touch someone. Wasn't that the old AT&T commercial? We need to turn back higher tomorrow if this thing has a chance of climbing back and making new highs. Otherwise, if we close below 363 tomorrow is my number, but below 360, it's going to be lights out on this chart. You got a left shoulder, you got a head, and a higher right shoulder. I said all along when we were way down here, go read the old newsletters. I was saying likely go to a 786, likely make it to 260, 365, but I said it wouldn't shock me they bump this left shoulder and go to something like 375. Exact high was, I believe, 370, 360. You can look it up. I think that's what the number was. And here we stalled there, and now even the feeder index was down today again. I believe something 370, 360 or something like that. It's coming off. Even with the hot sale barns out there, the cash index is coming off. So something I want you to see is we're going to blow this boy out again. We're going to go neckline. We really can't do one. It's way down here. But you do know something's wrong up here. Left shoulder, head, right shoulder. Well, let's look at the weekly continuation chart. This one should get your attention. Left shoulder, head, potential, right shoulder. Every weekly bar coming up since the major low had 1 week that bounced a previous low. Look at this. After that, every week, higher lows, higher lows, higher lows. So what does this tell us? Last week's low was 360 something. I got to go look the number up. I think 360.80 or something like that. And I've been saying if we close below 360, it's going to be lights out. So not far away. I would be getting those LRPs in place now. Maybe it goes higher. Let's just say these are the good ones to throw away, these LRPs that don't make money or put strategies or option strategies. But it's getting kind of hairy up here in the air with everybody's so bullish, and yet the market hasn't taken that out. Everybody was so sure a week ago we'd do this, even on the cattle. Things are getting tricky out there. This is Eugene Grainer with Heartland Investor Capital Management. I hope you find this information useful.